Hello, everybody. It's Randy Selzer here. Welcome back to my YouTube channel and welcome back to the podcast. Today, we once again have a very special guest, Denise Pisani, who's been on the podcast several times before. And Denise is a well-known mortgage broker here in Mississauga. She's affiliated with 3 different companies, Mortgage Center Canada, Get a Better Mortgage, and Mortgage in the City. So welcome back, Denise. Nice to see you.
Thank you, Randy. Thanks for having me.
Always a pleasure.
These are wonderful information sessions that I'm gladly I'm happy to help out and give information to.
Well, I couldn't do it without you. I couldn't do it without you. But so we're doing this. This is a right now, as I'm looking out the window here, it's January. It's a very nice, bright, sunny, but very cold day. So typical for January. And I understand you've been super busy. We talked briefly, and you're telling me that in spite of the fact that it's January, well, you're always busy. What can I say? Got a good business going there. Our topic today is going to be something we haven't spoken about earlier, and that's how to get a mortgage when you're self-employed.
Yes.
Yes, and it's a little bit different for those of you who work for a big company or any company. When you have your T4 slips, you have proof of income, which is pretty self-evident. But when you are self-employed, if you're an electrician or a plumber or a realtor or whatever, sometimes it's a little more complicated because most of us, and I'm self-employed, I believe you are too,
Right.
we write off a lot of stuff. Right? So one of the problems that anyone who's self-employed will typically run up against when trying to get a mortgage loan is that you may make a nice, $100,000 a year income. But after you do all your write-offs, which is, your legal right to do in Canada, you write off all your expenses, your net income is considerably less than that. And that's what gets sent into the tax man, to the CRA. And so on paper, it looks like you're not making very much money.
Correct.
Right. So I'm going to turn it over to you. You're the expert here. You've been doing this for a long time, and I know you are, and you know exactly what to do with self-employed people, but it is a little trickier than if you actually are an employee.
They make it a little bit tougher for us, but banks are recognizing that, there's probably 40% of the population is now self-employed.
Is that right?
Yeah, we definitely had to make adjustments with respect to qualifying and trying to make it easier for self-employed.
Oh, okay. I didn't know that. 40%.
Yeah.
Wow. Okay.
Yeah.
Good.
A lot of people are self-employed in Canada. So basically there's 3 types of mortgages that we can try to arrange for self-employed people. There's one that's called a high ratio stated self-employed.
Okay.
Then there's conventional stated self-employed.
Okay.
And then the third one is through a B lender, which it's not your regular documents that we need. It's a lot more lenient. And of course, B lenders are where the rates are slightly higher, right, and there's fees involved. But there's fees involved with all of these 3 mortgages. Okay. Unfortunately, to get this done, there are fees involved, which I will go over briefly with everybody on the podcast. Okay. So basically, the first one I'm going to talk about is insured stated income. And what the stated income part means is basically the client will state their income. So if someone tells me, listen, I make $10,000 a month,
right,
we're stating that this client makes $120,000 a year, 10 times 12, $120,000 a year.
Right.
But when they're filing their income taxes, the gross income that the business earned would be the 120 because that's before any expenses. But then of course, every company has expenses, maybe minimal, maybe a little bit more, but there's expenses, there's rent, there's product that you need to purchase. There's gas, there's phone, there's expenses. Some companies have a small amount and some companies have more.
Okay.
So, but of course, when you're filing your income taxes, the lower we bring down that 120 to show that, all of the write-offs. So if someone had, $80,000 in expenses, right, then obviously their income is that they're putting in their pocket $40,000, right, and then they're paying taxes on the $40,000.
Yep, that's exactly.
So the lower we bring it down, the less taxes we pay. But then that bottom number is the number we can only use to help qualify for the mortgage.
Exactly. So you go in
Right.
and you talk to your bank and say, hey, I want to buy a new house or a condo. And they say, well, you only made 40,000 last year. And then you have to try to explain, well, that's the profit from the business.
Right. That's the regular way of looking. That's how we approve all mortgages. But in this special programs, the state insured stated income program, the client would need to put down 10%.
Okay.
So if the purchase price, we'll use an example of 500. So they would have to put down 50. I don't know what you can get for 500 nowadays, but let's just make it simple.
Maybe a garden shed in the backyard.
Yeah. Okay. So 500,000, the minimum down would be 50,000 in this stated income program.
Right.
So they'd have to pay 50,000 minimum down.
Right.
The mortgage would be for 450, and then there will be fees on top because we do have to go to the insurance company, CMHC, Sagen, Canada Guarantee. Okay. So you will have to pay that insurance premium, which on a stated income file, it is quite hefty. You're looking at 5.85%.
Oh, wow. Okay.
So on 450,000, 5.85%, you're looking at $26,000 premium insurance fee on top.
That can be bundled into the loan, or it has to be?
Yes, that's bundled into the mortgage.
Okay.
So that's the first step of what you need to do.
Okay.
The second thing we look at for the stated income program is you had to have filed 2 years income taxes as self-employed. So if somebody calls me and says, hey, I just opened up my business last year,
right,
it doesn't fall under this program.
Okay.
No can do.
So minimum 2 years.
Minimum 2 years. The business has to be registered, either incorporated, or you have to have a sole proprietorship registered.
Right.
That's the second step. Okay.
Okay.
The third is you have to have really good credit, good beacon score, and good pass credit. No exceptions to that. So you must have good credit.
Okay. Well, that makes sense.
Makes sense.
I think I saw somewhere that they do a check to make sure that your business does not owe any GST or HST that has to be paid up.
Yeah. Well, that's part of the whole verifying income. Okay. So then again, what we do is we look at, so we'll get back to the person filing, earning, $10,000 per month. Okay. Right. So now that income is 120,000 per year. Mm-hmm. And then they've got their write-offs, which, we would look at in their tax return, in that booklet that you get from your accountant, it's called your T1 General. Yep. We do need a copy for the past 2 years filed. So in this case, we would need 2019 and 2020. Okay. If you haven't filed and you've been in business for 2 years, you still can't get the mortgage. You need to have filed, and we need to see your 2019 and 2020 T1 General. In that package, towards the back, I don't know what page it is, you will have a section called Statement of Business Expenses. Okay. This is where we review that one sheet and see what your write-offs were. So in this case, this client had $80,000 in write-offs. Remember, we did the 120, 80,000 in write-offs, right. 40,000 income filed. Right. Now, what we do is we look at those write-offs and we see if there's any possible way we can add some of that back. Okay. So then that 40,000 income maybe we can get it back up to 70 or 50 or 60. And then if we can get it back up to that amount, that's what we use that amount, that income. So say we've added back another 30,000 in income. So now we're at 40, 50, 60, 70,000 in income. And we added 30,000 in expenses back to that income. Okay. Then we qualify that 70 income to see whether it will carry that 476 mortgage that we just calculated.
So there's quite a bit of work involved here.
Oh, there is quite a bit of work, but the main things, and I'm not going to go into any more of the qualifying process, but the main thing is you have to be 2 years filed, right, and income taxes. You need to have credit at least 2 years with a good beacon score, no missed payments. It has to be your primary residence. You can't purchase this for a rental investment. It has to be a primary residence.
Okay, there's another good point right there.
Yeah, there's another good point. Exactly. And basically that's it. So
okay. So just to recap, you keep throwing out these amazing and important points. Okay, the first one that I noticed was you said that, first of all, the CMHC, the fees are going to be higher. Okay, the fees are going to be higher for a self-employed person than they are
so
for
from a regular client that is employed and has a salaried position, the fee is 3.1.
Right, and this one was 5 point something.
0.85.
Wow. Okay.
5.85. Yeah.
So almost 6%.
Oh, sorry, 3.85. Or no. Sorry, no, 5.85. Yes.
Yeah.
Oh my
okay.
goodness.
But that's a big difference. Okay. That's the first one. Second one, if you're self-employed, you must have been in business for at least 2 years.
Right.
Okay? You must have filed your taxes. If you have not filed taxes, is this not going to work?
It's not going to work. No,
you got to have good credit.
Mm-hmm.
And then you guys take a look at all those deductions that this person has been doing, or this company has
filed. Filing.
And, right. And you try to maybe factor back in some of those deductions to increase the net income, the taxable income.
That's correct.
To help them to qualify. Okay. So I don't know if I missed any, but those are all great points to know. Okay.
And you can't be in tax arrears. So if you owe the government arrears for your business for taxes,
you owe them past taxes, forget it.
No go at all.
And also the thing about the HST, that also has to be paid up.
Yes, so that has to be paid as well. So just to get back to you too, this people, which is unfortunate, but people on commission do not qualify for this program.
Oh, great.
Not commissioned people.
Okay. Thanks, Denise. It's been a wonderful interview.
Yes, unfortunately, this doesn't apply to anyone that's commissioned.
Okay, that's a
separate topic. Yes.
But okay, let's pick somebody who's an electrician. Let's say they're an electrician. Yeah. The trades have been so busy over the last few years, and this person earns $10,000 a month. They've been in business more than 2 years. They've been in business 5 years.
Perfect.
They're up to date. They paid their taxes. They've been good citizens.
Awesome. I need 2 years tax returns, 2 years notice of assessments. I need about 3 or 4 invoices for a few months. Invoices from companies that are paying.
So some proof. It's not just verbal. You got to show yes.
You've got to show proof. Yes, we need to see proof. Yeah. So a couple invoices just showing that it's legitimate money going back and forth that are matching deposits into the account.
Got it.
Yeah, exactly.
Okay. And so that's great. And
business license, incorporation, or articles of incorporation.
Yes, of course.
We need that.
Copy of your license, copy of your articles of incorporation.
Exactly. Yep.
And okay. Good. Okay. And that's 10% down.
Stated income with 10% down. And of course, if you put 15% down, that 5.85 will get reduced to 375. 3.75. So it's a tier. So if anybody wishes to discuss further, they can call me or contact you, and then we can go over the different tiers. Yeah.
Once again, as I always say, I'll put your contact info beneath the video.
Yeah, that's awesome. So and then there's the stated income program.
Okay.
With 35% down. Okay. So this is clients that have a lot more money to put down, and we avoid the fees.
Okay, so let's back up a little bit. For people who work for a company and they receive a T4 slip, that typically changes when you have 20% down. If you have 20% to put down, that's where the CMHC fees end. At that point, you're buying a condo or whatever, and you've got 20% to put down. There's no CMHC fees. But when you're self-employed, what was the amount you said that you have to put down to avoid CMHC?
Well, no, this is the stated income program.
Stated income program
through a bank.
Okay, but
you've got to have 35% down, and then we can
20.
state the income.
Got it. I got it. Okay, so it's a higher threshold. It's 35% versus 20 for a normal.
Yeah, because we're stating the income and we're going through a bank, so they want more money down.
Because self-employed are special. That's
yeah. I wouldn't confuse them with the 20%. It's
a separate issue.
Yeah, it's either 10% down. Or if you want to avoid the CMHC fee 35. And go through a bank and get a good rate, it's 35% down.
Gotcha.
Now, if you don't have 35%, so same rules apply with the 35%. 2 years in business.
Okay.
No tax arrears.
Yep.
articles or business license.
Yep.
And then we state the income again. The business is earning 10,000 a month, but he's only filing 40. Can we do add backs to bring it up to help qualify? But that's 35% down, no fees.
Can they purchase an investment property?
No, it's got to be primary.
Primary only.
No.
So how does a self-employed person buy an investment property?
They've got to that income that they're filing to the government has to qualify everything. Or we go to the next scenario, which is 20% down, or depending on each file has to be looked at and reviewed. It could be 25%, but it's 20% down to start.
Okay.
And stated income.
Yep.
Through a B lender. B lender rates are higher.
Okay.
And it potentially could be 20, 25% depending on the property.
Okay.
So if the property is in a certain area that the B lender qualifies as a high risk area, they may ask for 25% down.
Okay.
Okay. So it depends on the location, the property, and the individual. But in most cases, we can get the file done with 20% down. So again, stated income. The client tells me they're self-employed, not commissioned, self-employed, painter, electrician,
plumber.
Landscaper, plumber, drywaller, whatever the case is, contract work, IT specialist in contract. If they make $10,000 a month, deposits going into their business bank account, we annualize it to $120,000 a year.
Okay.
And then that person has $80,000 in write-offs.
Right.
Again, we look at their business expenses.
I gotcha.
Try to add back in. But now this is a lot lighter paperwork. So they need to show
the B lender.
No tax returns needed.
Oh, okay.
All we need is business license.
Yep.
Or articles of incorporation.
Okay.
To show that they have a business that is truly registered.
Okay.
Banking business account for 6 months, maybe up to a year, bank statements for the business account.
Okay.
Showing the deposits from the business going in. So it could be a hair salon.
Right.
Showing all the money going in every day, every month, totaling $10,000 a month. We annualize it to $120,000 a year.
Right.
Minus expenses. How much rent do they pay? How much staff do they pay?
Sure.
What do they pay for products? Deduct that from the 120. Then we figure out an annual income. But all I need for the B lender is business license, articles, and invoices.
Okay.
Proof that money's going into the bank account for the business. And that's it.
So that with the B lender, you don't have to supply your last 2 or 3 years of tax returns, that sort of
Exactly.
thing.
And the fees are actually lower with the B lender, but the interest rates are higher.
Okay.
So with the B lender, it's 1% of the mortgage amount. So the mortgage amount is $450. So we'll use that same scenario. So we'll use the same scenario, 500,000.
Yep.
Times 20%.
Okay.
They would need to put down 100,000.
Right.
The mortgage is 400,000. The fee is 1% of 400,000. So $4,000.
That's it.
And then the broker, myself,
Yep.
would charge an additional fee on top, depending on the difficulty of the file and so forth.
Well, there's a lot of work involved.
Yeah, there's a lot of work involved.
What would the interest rate from a B lender be typically? How much more would it be than a regular bank?
Right. So, if we were talking 2 weeks ago, because rates just took a jump everywhere.
Yeah.
Everyone just increased in anticipation of January 26th, the government's meeting, and the rates are going to be going up. So usually the banks do it a little bit before. I don't know why, but in the last 2 weeks, banks have been slowly increasing their fixed rates. So, you're looking anywhere between 3.5% and 4.5% for a 1 year closed.
Okay. I'm assuming variables are still under 2% at this point. I don't know.
Variables at the bank are 2%. B lenders don't offer variable. B lenders only offer 1, 2, and 3 year term. That's it.
I got you.
with a 1% fee and then a broker fee. So the broker
Denise,
charges about 1%.
You are an encyclopedia of knowledge.
Oh.
I'm telling you, because it's complicated. It is.
It is. There's a lot to know for sure.
Okay.
Yeah.
Okay.
But once you've been doing it for so long, it's like, but I'm still learning every single day too. Like there's a lot to know, but
plus it changes too.
Yeah.
I know for a fact that it used to be, I don't know, I don't want to date myself, but many years ago, it was fairly simple in terms of just stating your income. That was it. And then the banks got really tough for a while. There was
so like if you're paying $26,000 in that fee, or you pay and you get a better rate, not much better. You're looking at probably 3% right now at a bank.
So you're going to end up behind then with going with a B lender.
You could be. Yeah. So B lenders are offering pretty good product right now but that's less than 20% down. That's 10%.
Right.
So for someone that's having a hard time collecting the full amount, now if you're talking, today's properties, an $800,000 property, you need 80,000 down.
Minimum.
Right. It compared to 20% down, which is 160. So if someone's having a hard time collecting 160, then going the B route is going to be a lot tougher. And I would prefer to grab a property at 800 and pay, $35,000 in fees. And hopefully my real estate's going to go up further in the next 5 years. You know what I mean? So I guess, it all depends. And if you're renting, paying $3,000 a month when you could own and pay a $27,000, $30,000 fee and not pay rent anymore and now own real estate, maybe that is a better option. So everyone's situation is different. And obviously this is why we're here to help them and figure out what the best route is.
What are some of the things that a self-employed person, let's say they want to buy their first house, they're young, they're a ceramic tile person or whatever. They want to buy their first property, probably a condo, and they're thinking, well, this is a year out. I'm going to buy it next year in 2023. What are some of the things that a self-employed person can do to sort of stay out of trouble?
You definitely need to prepare yourself. And I just met someone 2 days ago, actually, and it was the exact same scenario you're just putting out right now. She's like, how do I get myself a home?
Right.
So basically, you need to, if your business has a lot of cash money involved, you need to start depositing that money. It needs to be seen. It needs to be in your bank account. In a
business account, because I also know some self-employed people that just use a personal account. So that's going to get
you know what? That's okay too, as long as they can show that they do have a business. Are they paying HST? But if they're just, Denise's nails salon and I'm just depositing it into my regular Denise account.
Right.
And there's nothing else that's proving that I have a business. Well, then there's going to be a problem. So if you want to do it the right way, you need to file the income. You need to put everything, file income. If you want to go through the bank and your business is earning $100,000 a year, you need to pay taxes on $100,000 a year.
Right.
That's just the only way you're going to get a mortgage. But if you want to go through the B route, you still need to file you need to deposit all income earned.
Right.
If it's cash, it makes it a little bit harder. It should be coming from clients, either direct deposits, transfers. We need to prove that you're running a business.
Yep.
The bank is lending you $400,000. They want to make sure that they're lending it to someone that has a legitimate business. So if your business is all cash and you don't want to deposit the money because it's easier and better to just get cash from clients, well, then it's going to be
really tough,
almost impossible for you to borrow money from a bank or even a lender.
Absolutely.
So, yeah.
That's the world we live in.
It is, Unfortunately, it has to be for 2 years. We need to see it. So a B lender, you don't have to be 2 years. You could get away with 1 year. So if you want to deposit transfers from a business for 1 year, the B lender can ask for 6 months to a year bank statements proving the business is making money. But if you want to do it through an A lender bank, your big 5 banks,
forget it.
It's got to be filed income tax returns.
Right.
All of the kit and caboodle to make everything legit. But if you want to go through a B lender with 20% down, you can do 1 year regular deposits into your account.
Okay. So just to recap, maybe see if I've got all this. With a B lender, these are the differences. With a B lender, first of all, you don't have to supply your tax returns. Number one.
Correct.
But you have to have 20% to put down.
Correct.
With a B lender.
Right.
And the rates are going to be a little bit higher. Okay.
Right.
A little bit higher than what a normal bank would charge, but it's easier.
It's definitely easier.
Okay. And a B lender would typically be like a trust company or not the major 5 banks, but
exactly. They're owned by the banks. If you look and see who owns them, it's usually the banks that own them, but they're B lenders. So they're like your Home Trust, your XMC, your Equitable. Those are your B lenders.
Okay. All right. So there's options out there, but the number one thing is if you're behind on your taxes, whether it's your personal taxes or your business taxes or your HST, you're not going to get a loan from anybody.
No, nobody, not even a bank. Exactly.
Right. Okay.
When you're self-employed, the first thing a bank, the big 5 banks ask for is your notice of assessments and your tax returns. Sure. If you're in any kind of arrears, they will not lend to you.
Forget it.
B lenders do not ask for anything to do with returns.
Okay.
So if you are behind in your taxes, you may get away with it with a B lender, yes, but you will have to show 6 months bank statements or possibly up to a year.
Okay. Well,
but you should be up to date with your taxes because if they find out last minute.
How did you buy that condo when you owe CRA $80,000? Right. Mm-hmm. Yeah. Okay. Or
exactly. Yeah.
Right. Okay.
They'll just slap a lien at the end on the house. So they'll get their money somehow.
And have a nice day. Right.
Yes. For sure.
Well, that's very interesting. And do you find that the banks are tightening up at all or loosening up at all, or is it pretty much business as usual in terms of because the prices are so high? I mean, there's a lot of money involved.
They've been pretty good. They're like, especially like I said, for self-employed, these programs, they've come a long way. Like for sure, 20 years ago, it was a lot different.
Yes.
They did tighten up, but this is, these are good programs. Like, I do get a lot of clients calling me who haven't filed their taxes and they're self-employed. Well, you can't get a mortgage then. Wow. You can get a private mortgage at 7%, 8%, but you can't get a mortgage. If you're not filing your income taxes, you're not going to get a mortgage.
There you have it, folks. You got to be good citizens, file your taxes and pay your taxes. If you want to get
10%. Yeah. So there's different programs we do have, and each individual may qualify for a certain program. And definitely you need to talk to a mortgage professional, and then we'll help you get prepared. And so that question you asked, someone that wants to buy this is something you definitely need to prepare for. You can't call and say, I want to buy next month.
Right. If
you don't have all your ducks in a row, 100%.
All right. That's good advice. Absolutely. So folks, there you have it. Call Denise or send her an email. I'm going to have her contact information underneath. Make sure you do that before you consider even doing anything, before you go out looking at houses or condos or townhouses, whatever. You need to speak to someone who knows how to do this if you're self-employed. Very important distinction. There you go. Anyways, I guess that's it for another day.
Yes.
Another great talk. Thank you so much for coming on board the podcast. It's always a pleasure.
Awesome.
And, have a wonderful day, Denise Pisani, and let's do it again sometime.
Yes, for sure. 1 month.
All right. Once a month. We're committed.
Once a month. There we go.
So have a great day.
Thanks, Randy. Yeah. Okay. Thanks for having me. Have a great day.
Okay. Bye.
Bye.
See you again. Bye.